Hello, Jason here. Today is January 12th, and this is your aftermarket update. Okay, so we had a good day here at the Oil Trading Group. In fact, it's been a really nice first week and a half of the trading year here for us as well. Since the 4th of January, we've had a nice little run. We also had a nice run today, but saying that doesn't tell the complete story or give you the complete picture of today's trading. So before I go through and we analyze the charts and we look at the recap on today's trading, I want to go through some of the statistics here for you. And then I think we probably need a trip to the couch of the desktop psychologist. So let's take a look here. First of all, let's run these stats. This is the first trading day of the year, Monday, January the 4th through today. And there is the gross number is 3920 before commission. So really, we're almost up 400 ticks in 7 trading days since the 4th of January. You factor in the commissions, 3629, so 363 ticks since the 4th of January. Today ended up being a nice day here today, but I want to dig into the numbers here with you for just a moment, and then I want to come back, and like I said, we're going to take a trip to the desktop psychologist here. So let's go ahead and run today's numbers. And you can see that our gross number here was $960 or 96 ticks. And that the net after commission, so we traded quite a bit here today, was $92 or 868 on the net. And so you can see here that we only won 7 of the 10 setups that the trades that we took here today, right? There was only 7 winners, or 7 losers and 3 winners. Only 3 winners today. And the reason that happened, that we were able to come out ahead so significantly, is because our average winning trade was $860 and our average losing trade was $245. That is a 3.5 to 1 win ratio, right? So 3.5 times our winners versus our losers. So again, when you're able to do that, you are able to be successful. Now, if you could stretch this out over the course of the long haul, then you could have a 30% winning percentage and still be a successful trader. And that's really what we all aspire to, is being able to win even though you aren't right most of the time on a particular day. One other thing I want to draw your attention to before we come back and talk about that desktop psychologist is the average hold time today. We were holding winning trades all the way to completion to target, 34 minutes the average winning trade, and 5 minutes the average hold time on losing trades. So again, very significant numbers as you take a look at this. So let's back this up though here, and let's go back into the 4th of January, that Monday. We're only winning at about a rate right now, and again, this is a little bit lower than I need it to be. But again, it's a very small sample size. I'm just using this as an example here today. But this is a little bit lower than where I need it to be. The average winning trade 383 versus 233 on the losers gives you a 1.64% winning, or 1.64 times winning trade to losing trade. Also, we're winning 52.5% of our trades versus 47.5% end up being break even or losing trades. All right, so again, what does this all mean? Well, let's take a look at the desktop psychologist. And why do I call this spreadsheet our desktop psychologist? Well, I call this spreadsheet the desktop psychologist because it gives you this spreadsheet is designed to take complex data and information and spit out your particular results based on random scenarios. So again, as we just discussed, I am winning 52.5% of my trades. So if you look over here in this column, I've got 50. If you look up here in the bar, you'll see it says 52.5. Here it says 53, but if you look to the left, just above the logo, you can see it's actually 52.5% winning trades. And my losing trades are 47.5%, and that is 47.5% for a total of 100%. So essentially what this is saying is that over the course of 100 trades, I'm going to win 53%, I'm going to lose 47% of these trades. Right, 52.5, 47.5, you get the picture. Okay. Also, I am risking 0.16% of my Top Step Trader $150,000 account. All right, so that is basically $240 each trade. What does that mean? That's about 12 ticks, right? That's about 12 ticks per contract on a 2-lot, and that is about the average here. The average losing trade is 233.29. So what this spreadsheet is going to do is it's going to tell me, based on a randomly distributed 100 trades, based on the numbers that I have put in, it's going to tell me what my drawdown will be and what my potential profit will be as it has been randomly distributed across these numbers. So we're going to run all of the trials through the spreadsheet here. And we'll wait for this number to spit out. Okay, so in this case, based on this limited information, you have one profit, $5,916. You've grown the account from $150 to $155.96, and that's over the course of 40 trades with a, with a probability of 49% wins, right? Which is close to the 53% that we have plugged in. So it's a little bit lower than what we're actually doing. And so let's just take a look here really quickly. So again, just a reminder, we're about 40 trades into this right now, 40 trades into this 100 randomly distributed across these levels and randomly distributed across winning and losing and the average winning trade and losing trade. And it is spitting out to us that in this ratio, we'd be able to, we'd be looking at about a $6,000 profit over about 100 trades. That's close to where we are. We're about 3,600. We're a little bit ahead of this curve, but that's about where we are based on the numbers that we've plugged in. So here's what I want you to look at, though. I want you to look at this little stretch of time right here, okay? So from trade 1 down to 17, there are only 1, 2, 3, 4, 5, 6 winning trades, okay? And here's why I call this the desktop psychologist. If I told you you're going to win 6 and lose 11 trades, or if you're in my trade room like you were today and you saw me lose a few trades going into the wins, you're going to get very discouraged very quickly, right? And so again, 1, 2, 3, 4, 5, 6 losing trades, 6 winning trades out of 17. Okay, this is why I call it the desktop psychologist. If you are risking the right amount of capital, you are not risking too much, and you are going through the process and understanding that the system and the gains and the risk reward and all of these things equal out in the end, you can safely sit through this and not be freaked out by it. Let's go a little bit deeper. Let's take this run of 24 trades. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 wins and 15 losers out of 24 trades, right? If you just come to my room for the first time, or you've been in here for a week, you're going to go, holy cow, this is a lot of losing. This system must not work. It must not be the right thing, right? And then you move on to the next one. That's why I call this the desktop psychologist. This spreadsheet allows you to understand where your wins are going to come in. And now let's take a look at here, all right? So these are randomly distributed. Now, from trade 62 to 78, that's 16 trades. You win 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Now you're winning 11 winners and 5 losers, right? And here's a run from 92 to 99. 1, 2, 3, 4, 5, 6, 7, 8 in a row. 8 trades in a row. So the point of this is the desktop psychologist gives you the confidence and understanding that if you stay with your system, you stay with the things that you're doing, it's going to give you numbers in the end that are successful. So let's run it again. It'll be randomly distributed. Before we do that, let's take a look here. The max drawdown on this account was 0.8%, right? So 0.8% was the max drawdown, and that is 150,000 at a 0.8% is $1,200. That was a $1,200 drawdown based on this. So let's reset this spreadsheet again, and now we're going to rerun it again, and let's see what the numbers tell us. Let's see here. Okay, we're going to run all the trials again. I think we are. Hang on. There we go. Again, we should get a different number based on this random distribution. And you know what? It came quite close. Again, same type of random distribution. Let's see if we can reset this one more time. And we'll run all the trials one more time. That was a really close approximation. Okay, so this time we were at 8,572. The winning probability is 53% at 53% again. So another randomly distributed set of statistics. And again, what this simply tells you is that your system at these numbers will continue to be profitable, right? And so as a member of the Oil Trading Group, you get a copy of this spreadsheet so that you can work it. The reason that I'm showing you this is that today, let's go back to today's numbers, right? And we'll look at today. We'll run this the 12th to the 12th. You can see that I was down 7. I only won 3 of 10 opportunities that I took today. But because my trades were 3.5 to 1 winning to losing trades, I actually made out okay today. But if you don't understand this concept, if you don't understand the fact that you are going to go through losses, that is a very realistic expectation. You are going to lose. If you trade long enough, heck, you don't even have to trade long enough. If you trade, you will have losing trades, right? That is the bottom line. So what we are doing here by showing you this spreadsheet and by showing you the OTG risk analyzer that I call the desktop psychologist, it's giving you confidence to say, hey, if I'm properly capitalized, Top Step Trader, if I have a system that over time works, then I can withstand the drawdown, and that I know in the end I will have a profitable system. And that's what this spreadsheet is designed to tell you. I was asked a question today, how do you withstand some of the swings in the marketplace? Well, you withstand some of the swings in the market because you are properly capitalized and because you understand the risk-reward relationship that this spreadsheet will point out to you and what your statistics will ultimately point out to you over the course of time. So having said all of that, when I got into, I was down 130 ticks today. When I got into the OTG trade of the day that ended up being 230 ticks, 230 tick winner. So as I was going through it, I was trading my Top Step Trader Combine. I was not even close to their drawdown expectation, their rules, the things that they offer in terms of boundaries. I was nowhere near any of that. And so because I was low risk on the front end, and again, we were adding to positions on the back end, I was able to successfully get all of what I had lost back and then some. And so as a result, if you look back to the 4th of January to today, again, I think we're up 369 ticks over the course of that time. Losing trades are going to happen. That is a fact of trading. That's a given. And so the only way that you can withstand the ebbs and flows and the equity curve drop and et cetera is you have to be properly capitalized and using good, solid risk management principles. And that's what the OTG risk analyzer, what I call the desktop psychologist, that is what that teaches you. So there's a few things that go on here. If you just came to our room for the first time today and you saw 7 trades lose out of 10 were losers, and you saw me down 130 ticks, you probably, excuse the expression, you probably crapped your pants and went, this is a joke, I'm out of here, right? And in the end, we ended up being positive nearly 100 ticks on the day, because once we got back into sync with the market and once we got back in line with the trend and we got our feet back underneath us, we were able to successfully pick up a trade that lasted, well, the trade of the day video is over an hour long. So the trade by itself today, this trade lasted over an hour. I took positions off. I added back to positions once we cleared certain levels. There was a lot of activity going on, but in the end, we were able to successfully manage this trade today to net $868, 87 ticks rather, right? 960 was the gross number, so down from 130 to 960, you can do the math. Down 130 ticks, up 96 ticks. Traded a little bit more than I wanted to here in terms of a commission perspective, but in the end, I have the confidence in the system that I'm using. I have the confidence because the desktop psychologist tells me this is going to work out in the end. And even if it doesn't work out today, like I had a losing day on Thursday of last week. So we'll go back here. I had a fairly decent sized losing day on Thursday of last week, and you can see it right there. Right, there's your losing day on Thursday of last week. That was the only losing day that I've had in this little run. And as a result of that, right, this losing day on Thursday, it was just one day. We came back strong on Friday of that week, right, and overcame the loss. And then we've had 2 really good days this week. So again, I'm belaboring this point because it is an important point. If you have the confidence in what you are looking at, if you understand the dynamics and the statistics around your particular trade, right, and the way your trading style and program works, then you can withstand the ups and downs that go on intraday in a session. And know that in the long run, if you stick to your plan, stick to your trade, and continue to stick to your guns, you're going to be okay when it's all said and done. All right, so that's enough of that. Let's talk quickly about what happened in here today and where we had an historic event occur today. We haven't been down to some of these levels here. We broke the $30 a barrel level here today. In fact, we got as deep here as 29.93 was the low today. We haven't been back to this level. And we'll just draw a quick horizontal line here. The last time that we were here was in December of 03. So that's just about 13 years ago, a little over 12 years ago that we were down at this level. So that's fairly significant. So again, we just had a quick break down underneath that level. Tomorrow is crude oil inventory report day, and so there's a chance that we could threaten that area. One of the areas that we talked about in the trading room today as a potential area that we are going to threaten is this it's about this 29 half area. So we came down into this zone here. This is actually 28.37 is the measurement from down into the midline here, but that's down to 28.37. But there's a decent opportunity that we could come down and challenge the 29 half level tomorrow, and then we'll see. So I got a little bit out of sync today, and here's why. And I was anticipating, so let's go ahead and draw. So if you take this swing high and you measure down to this swing low, I was assuming that I was fairly confident actually that we're going to come up to this 32.37, 32.38 level. That is our sweet spot. We had a support and resistance line in the sand around this, it was around the 31.82 area in that zone. So I really did feel like we were going to come up and challenge this 70.5 level. We did not, but I kept trying to step in front of the train, if you will, and literally I was out of sync and out of rhythm until I finally kind of came to my senses and grabbed the short, which occurred right around the ETH session open price. So let's just take a look at that really quickly. So if you come back over here, and we'll grab this chart, and we'll just turn off the primary levels for a moment. We'll turn on the secondary levels here. Okay, so a couple of things that occurred here today. When we hit the 200% range extension like we did yesterday, so down here at the 200% range extension, right? There is right here at the 200% range extension. One of the things that we talk about is that we're going to make it to fair value, or sorry, we'll make it to fair value that day or the following day. And we did not make it to fair value yesterday, so today would be the following day. Fair value up here at 32.04, right? So the market rallies up into it. This is that about the 61.8% retracement level. That is right in this area here. So when you measure this down to here, we came right up into the 61.8. I thought we were going to reach out to this 32.38 level. And so I was a little bit stubborn as we were going down this path here, trying to get long into I was trying to get long really against the trend. And you know what? I ended up paying for it early in the session. I ended up paying for it quite a bit. And so one of the other ideas here that really it kind of took me a minute to get recalibrated is this is your daily chart. We are heading to the downside here. Clearly on your moving averages are plotting to the downside. By the way, here's the 29.5 level that I thought we'd reach out for. It's the 161.8% range extension of this swing. And so I do believe we'll come down to this 29.55. We're clearly in the bear trend here. On the time frame that we like to trade, we were overbought right up here at the 61.8. And so I got stubborn, right? I was trying to reach out to this 32.38 where I was going to look to get short, and I kept thinking we were going to reach there, and I got stubborn right in this area. It wasn't until we shifted short around the ETH session open price, and that's where the OTG trade of the day picks up, is right here around this 31.11. We were able to ride a significant chunk of that all the way down, adding to the position down to around 30.10. So we got in around this 100 tick move right in here. So we ended up salvaging the day, obviously, as you saw from the numbers. And so that is the OTG trades of the day. I'm going to trim down the OTG trade of the day. I'm going to show you the entry, and I'm going to chop it up a little bit. You're not going to have to watch the entire hour of that particular trade, but I did want to kind of give you a good analysis about what you were seeing here and why. So I'm going to sum it up like this as we move on to the OTG trades of the day. Not every trade is a winner. You have to understand that. If you come into this trading room or any trading room for that matter, you have to understand that not every trade is a winner. Also, you have to understand how your particular system, or in this case, our system, performs over the long term in order to be comfortable with it. Trading in the simulator, trading to get a feel for it, right? You just have to understand what it is that we're doing and why we're doing it and why I will continue to trade, even though in your mind you might think, oh boy, we're out of control. Yes, I may lose trades. I lost 7 out of 10 today, but the 3 that we won put me up nearly 100 ticks on the day, right? Because I have confidence in what I'm doing and I understand the numbers around what we're doing, and that is based strictly on the statistics, okay? So again, hopefully this has made some sense. I feel like I've tried to cram a ton of information into a 25-minute window, but I think it was important for you to hear that today. So again, without further ado, I'm going to let you listen to these OTG trades of the day. So here are the OTG trades. So there's 14, 15. I'm going to wait for 16. There's hit but no fill at 16. In at 15. Stop is 28. And this is it. Takes me out. This is it. 26. 30. Stop is 31. Stop is 31. Okay? Now, I'm going to get up for a minute. I'm not going to micromanage this thing. I'm going to look to add one underneath you here. Now we can look to target 66 as a potential stopping point. I'm going to add one at 94 and then 83. All right, looking to target 66, and I'll be right back. how deep did we push here? Did we get down to 09? It looks like 31 on the stop here. There's 13, 12, 11. You still got liquidity underneath you stacked up, and liquidity as high as 32. So we'll see. Eight, 7, 6, 5. Now let's go. Adding at 94. Got liquidity parked there at 03. Adding at 9. We're going to look to target. So I'll be on with 4. I'll take 3 off at 66 underneath you. Okay. I would take 3 off at 66. 01, 86. Come on, 70, 69, 68. Come on, 68, 67. We just hit 68, 104 on the offer, on the bid rather, at 68. 4 ticks is $120. Okay, boom. All right, I've got 1 left, and I'm going to add at 54. The trail stop now is 79. Okay, trail stop now 79. 54.38 with a target down at 08. Okay, stop is now 79 here. Come on. So you've got just lines of support underneath you here, but I do believe we'll come down one last time and take out my target. I've bet on it. Now we'll see. We'll see if that's indeed the case. And if it takes me out, it is what it is. That was pretty close. Stay in this. 18, 19, 20, 21, and out at 22. Okay. Well, there you go. That's pretty good, right? That's a pretty good comeback from what was started out as a tough day. And I'm done. So what started out as a pretty tough day ended up being pretty sweet. So, top right-hand corner, there's where we are on the combine. And your book map told you all about it on the way down. Thanks, Mike. Thanks, Brad. Thanks, Kareem. Thanks, Mark. Not easy. Not easy today. So there's your rally out of that zone. So pretty close, right? Pretty close. All right, that's it for me today, guys. Okay, lots of good information here covered today. You could see that final trade ultimately did not hit my target. It got down to 10 and then came back and took me out a little bit higher than that. A little disappointing. We did ultimately make it down to the 08 level, just didn't make it down in time to keep me in the trade. That happens sometimes. That's part of trading. So again, a lot of information covered in this video. You may need to go back and watch it a couple of times just to make sure you gather everything that I was trying to communicate with you here on this video today. So again, lots of good information, and hopefully you'll be able to absorb a lot of that information. So anyway, as always, I want to say thank you for spending time watching us trade here at the Oil Trading Group, keeping up with the videos and the daily information. And until tomorrow, I want to wish you good luck and good trading.